Today on the show, Kenya boss aims to launch derivatives market in first half 2019. Liberia's review President Way's first year in office. Plus, South Africa's Deputy Finance Minister denies corruption allegations. Thank you for joining us. This is Business Incorporated. I'm Chimezie Obi Iwago. First, begin with the markets. And over here in Africa, most of the markets we track were in the green at intraday, except the Nigerian stock market. The index, the NSE index was down 0.28%. In South Africa, the JSE index was up 0.58%, while Egypt's EGX 30 was also up 0.20%. Kenya closed in the green on Wednesday. And in the Middle East, all the markets were up at intraday. Dubai had the highest gain, up 1.14%, lifted by corporate earnings. Saudi Arabia's stock market rose 0.24% as banks gained, and it introduced the MSCI Tadawul 30 index. The Abu Dhabi index rose 0.80% as Abu Dhabi Commercial Bank gained 2.6%. Qatar was also up 0.01%, just marginally there. And in Europe, stocks moved slightly higher in early trade as investors digested comments from the Federal Reserve's latest meeting. For more, let's hear from Paul. Good afternoon, Paul. It's a beautiful day, of course, today after the Fed's meeting. Right. Now, stock markets are up and rallying after the Fed's decision yesterday to keep rates steady. And, of course, the remarks that followed looks like Jerome Powell has given the markets just what they wanted to hear. What do investors think? Did he bow to market pressure?
Well, certainly the markets did respond very well in Asia. We saw a rally, and we did start off very positive this morning, and it is exactly what they wanted to hear. There's certainly some criticism about this turnaround that's been seen by the Fed chair only 6 weeks ago. It was very, very hawkish, and now there's a very dovish tone, very, very settled, and so that criticism is there. But it's more about really the remarks that were made in December that are seen as critical, though. Because in December, it seemed like the Fed was on autopilot to decrease its balance sheet and to raise interest rates over the course of the year without even looking at what was going on in the larger economy in the world. And now Jerome Powell has looked or has stated that while the U.S. economy is in good shape, although that's contested, there is worry about the international trade, about China, about Europe as well, and that they're taking this into account and it's not on autopilot anymore. So why did he have this turnaround, or why did the Fed have this turnaround? Some people said, well, this is just the turnaround the Fed needed, and it is finally now data-driven. Looking at what is really going on. And if we look at it over the past weeks, we have seen the shutdown in the U.S. We have seen no significant progress in the trade relations between the U.S. and China, and so there's all the reason to stay at least cautious. And be flexible on turning rates. Certainly, the news was taken well in emerging markets. There seems to be a new risk appetite for emerging markets, capital flows starting to go there, and the dollar debt increase has slowed also in the past weeks that we've seen. So that's certainly good news for emerging markets.
Now, the UK isn't going to get an easy divorce from Europe, and it looks like no amount of pleading and demanding is going to change that. How the UK's car sector is ringing the alarm bells. What's the story there?
Yeah, the EU is not ready to give way. It's going to push the UK to a point of no return, really, it seems, and that's what some diplomats are saying as well. There is no renegotiation. And now we're seeing more and more voices from the corporate world, from the UK corporate world, saying, hello, this is really not the right way to go. We need a different solution. The Society of Motor Manufacturers and Traders has said that really a no-deal Brexit is the worst possible outcome and it needs to be avoided at all costs. Investment in the auto sector in the UK are down 50%. So a lot less money going into the UK auto industry, and that has the association worried, of course. The car production in the UK has been the lowest in 5 years, and if output goes down, that also means jobs will eventually be lost. The country's biggest car maker, Jaguar Land Rover, has already gone down to a 3-day work week in some factories, trying to preserve jobs because it doesn't want to let people go, but a lot of other car makers are looking for other solutions. BMW has said it's going to put the summer break, the summer pause that it usually has, into the first week of April to kind of buffer the Brexit fallout, but it doesn't look good right now. And exports from the UK car industry, even though they have tumbled, over 50% still goes to EU's 27 countries. So the UK is still very much dependent on that European mainland market.
And Facebook with a mixed bag of news today. The company is reaping record profits as digital advertisers flock to the network, but Apple has kicked a Facebook research app from the Apple Store that Facebook monitors the digital behavior of teenagers. Which of those news made more of an impact?
Well, the shares traded up 11% on Wall Street after hours, so the positive news was really what investors were looking for. Some said it was the most reassuring numbers they had seen out of Facebook in its history, in its short history. And certainly the numbers did show that Facebook is doing better than a lot of people expected. And the expectations weren't really great after a year where Facebook was hit with scandals of propaganda, of data security, of hacks, and all of that didn't really seem to affect the bottom line that much. User logins from users have actually gone up, especially in Europe where they were stagnating, so that is very good news. And profit in the fourth quarter was up 30% as well. So a lot of that revenue came from ads it is putting on Instagram. Even though the prices for ads have gone down, the number of ads has gone up, and so Facebook is reaping profits there. Another plan to merge Facebook Messenger, WhatsApp, and Instagram in a certain way, at least to connect them on the backside of things, if not merging them into one service, might not be exactly to the liking of customers, but it might increase the number of people accessing Facebook's core product, Facebook. And that, again, might bring a bigger opportunity to make some more money with digital advertisements. So things aren't looking too bad for Facebook right now on the financial side.
All right. Thank you very much, Paul. One more day to go. So let's continue to keep a tab on the markets for more updates. Thank you for your time.